There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome to the Trading Justice Podcast. Matt Justice with my co-host Tim Justice. Tim, how you doing today?
You know, I'm excited and to be here and talk about the markets this week. I'm doing great, Matt. You know, and I love doing these podcasts. I heard you and Gino had a good one over the weekend. I still haven't been able to go back and check that out, but I was just excited to be here. I want to talk markets, don't want to talk earnings. Yeah. I want to pick your brain on a couple of things, but yeah.
You know, I absolutely love bringing on guests every now and then to bring on different perspectives and whatnot. And obviously, both of us have known Gino for the better part of a decade. And, you know, he's slightly crazy like a fox. He's an amazing trader, pure theta. And I got to tell you, Tim, I love it how Gino teaches theta. He doesn't even teach it. He just shows his theta. He says, that's theta. Boom. And it's just like, oh my God, that's awesome. And, you know, it comes in after, you know, I've been teaching theta for the better part of 2 hours. And he's like, here's my theta. How many of you guys want to be like me? And outside the ponytail and the surfer and, you know, jumping out of airplanes and whatnot, we all want to be a little bit of Gino.
I think we all have some Gino personality in us deep down. We might hold it back. I embrace it. I love the attitude. I remember when I first met Gino. It was 2006, I believe, in Orlando, and then I really got to know him the next year in Las Vegas. We do these Rich Dad Symposiums, the yearly annual events, and it was 8 in the morning, and we're getting our tables set up. Most people aren't even up and at them yet. The students don't come in until about 10 or 11. And Gino just comes over to me and he says, hey, dude, we got 2 hours. Do you want to go skydiving?
Yeah. Okay, that was the first time he asked you that. Mine was that year as well, but it was in July, or it was our Vegas one. And Gino says, and we're at the annual forum, and literally there's like 2,000 people there, right? It's an amazing Rich Dad event. Just so much energy there, so much fun, so much networking and whatnot. Well, this is the first time we all kind of got together as a group, you know, the mentors and whatnot. And I remember we're sitting around and we're having an adult beverage. And Gino basically it's like midnight tea, and you might not even remember this, but he comes up to both of us and we're just sitting there talking. And he says, hey guys, I know this guy that would let us do like night diving. And I'm like, night diving? What? He's like, yeah, dude, they'll take us up in a little small prop plane and we could jump out. And I'm like, you're insane. Get the hell out of here, you idiot. You know, and guess what he did? He went night diving. I mean, the guy's crazy and he's amazing and he's awesome. And if you don't have a friend like Gino in your circle, you need to find a Gino in your circle because he is that awesome. Love Gino. He's got a great name for a trader too, Gino Poor.
Oh, I love it. You know, and I'll tell you, it's just a reminder to me. One thing I was just thinking about is I met Gino a long time ago, and when I first started trading, I had no idea the importance of networking.
Yeah.
You know, going to these events, finding other people. You know, we all know the logic around surrounding yourself with successful people. But just like any other venture, trading is no different. You need them. I mean, they can push you a little bit. They can make you think. You can go back and collaborate and share ideas. You know, they don't have to be a trading partner, just somebody you got emails with and you can have a conversation with. And so all of you guys out there listening, you know, make that a priority, is that you build your power team. And that's a phrase you use all the time, build your power team.
Well, you know, putting people around like that, like yourself, Gino, Noah, some of the other mentors at Rich Dad Education and whatnot, putting those people on your power team and really kind of learning from them, it will force you to enhance your skill set. It'll force you to become better. And you know what, guys? If people have on their current power team people that are negative, people are the naysayers, people that, don't lift you up and secretly kind of want to hold you back, secretly, don't want you to be successful. You need to kick them off your team. You need to kick them out of your life. And you need to surround yourself with people who will try to drive you to achieve utter greatness. And that's what Gino does, and that's what Noah does, and that's what you do. And, that's why, I've felt for a very, very long time that I'm one of the luckiest people in the marketplace, because I get to talk to these people on a daily basis,
Yeah, I take a lot of pride in the fact that over the years I've developed patience as a teacher, as a person.
Yeah.
Being a father, having kids, you have to. I mean, there are times you lose it, but you have to try to be patient. And I don't have patience for negativity, though. That stuff, get out of here.
Get out.
I'm with you 100%.
Drives me absolutely crazy. I just can't stand it. It's never helped anybody out. It is what it is.
Sure.
There's going to be people out there like that. And, the way I've always seen it is thank the trading gods. Because if we have a lot of people out there that think trading's like gambling, they're going to act like it's a gamble, and it's going to allow us to take advantage of the situation.
Yeah, no, absolutely. Which brings up the whole, today's Monday, and people who treat trading like a business, Monday's a very big day. Mm-hmm. Not just for the action in the market, but you kind of get the chance to plan your week out. One thing I wanted to, ask you about, Matt, I was thinking about this before a podcast. How do you treat Monday? How do you approach the market on the first trading day of the week?
It's a great question, and my routine starts on Sunday. It starts on, a lot of it is that, either you're doing the newsletter or I'm doing the newsletter, and that thing takes literally like 2-3 hours to write, right? And because you're doing all your research, making sure you're prepared for the marketplace. But, even if you're not writing the newsletter, we're still doing the same thing. We're just writing it, And when I'm looking at the market on Sunday, I'm always trying to build an expectation for the market. I'm trying to build an expectation from a technical perspective. Where are we at in the trend? Where are we at in the patterns? Where are we at in terms of relationship to support or resistance? Are we completely overextended, and is the market going to use it as a reason to lock in profit? Whatever the case might be. I always try to look at it from a technical analysis perspective first. And then I try to look at kind of what is out there in the marketplace that could drive market behavior. And when you're looking at it this week in the market, you're really talking earnings this week. Obviously, we got to talk a little bit about the geopolitical situation, but you're talking earnings. You have over 130 large cap stocks, which is a 10 billion market cap. Over 130 of those are reporting earnings this week. You're talking about the likes of the CMGs of the world and the Netflix of the world, the ones that reported today. And then tomorrow you got, Apple computer reporting. And then later this week you got, Baidu and Facebook and Dow and Dowchem and Ford and GM and Hog and, Biogen and Alexion and, Boeing, Caterpillar, Lockheed Martin. And then you got the airlines later this week. And I'm really interested in kind of seeing what the airlines do this week. Because they've been in such great trends, just some of the most consistent trends over the better part of the last year, and they all kind of got hit last week, and understandably so. And so it's going to be interesting to see what American and Delta and Southwest do this week. Netflix and Amazon and Starbucks. You just got so many different companies reporting earnings in so many important sectors that that's going to be the big driver this week. Economically, I like to look at it as well. And economically this week we don't have very much. Durable goods orders on Friday. You also got the CPI report coming on to tomorrow, but those are going to be minor headlines. It's an earnings week, and it's going to be a big time earnings week.
And I don't know exactly what our skill level is or education level of our average listeners. So maybe I'll go back and kind of define a few of the terms Matt was talking about. I think that was a really good explanation, Matt. Earnings dates. 99% of you will know it, so this is for the one that maybe doesn't. An earnings date or an earnings report, you hear it all the time. It is such a key component in markets. And when you're a public company, you have to file public information, and that's what we're talking about. And when major companies come out and release this information to us as traders and investors and the institutions as well, we react to it, and it will drive the stock. And Matt named off a lot of really big names. Here we are. Today's July 21st. And by the way, everybody, you're listening to the Trading Justice podcast with Matt and Tim Justice here on a Monday morning. Like us on iTunes and Facebook and everywhere else you can find us. And if you enjoy the podcast, rate it and give us a review on iTunes. We like to hear
Hey,
feedback and
Hey, real
and
quick.
whatnot. Yeah.
So we had our first review on iTunes the other day, and you know how we've been talking about who's the host, kind of going back and forth. They said they gave us 5 stars, and they said Matt and Jim do an excellent job.
So
I had a
apparently
kick.
you're the host.
Apparently, I think that first review settled it. Matt and Jim.
Hey, no, you need a sample size. Come on, you know how it works.
All right,
You don't have to be a statistics guru to know that you can't take one review and interpret it. You might have paid that guy or that girl to give the review for all I know.
How do you know it wasn't me?
Right?
Matt and Jim, I had a kick out of that one. Anyways, coming back to what you're saying, yeah, earnings are announced every quarter, correct? And typically when an earnings is announced, we get 2 different things. We get, what their earnings per share was. We also look at kind of what their net revenues were as well. For example, tonight we had Netflix. Netflix reported earnings today, and they always Netflix reported after the bell, and literally within 5 minutes of after the bell, Netflix jumped from somewhere. Let me get you the exact numbers, T, so I can get your take on it. Netflix jumped from 450 to 470. Back down to 460, and now it's settling right now at about 455. So Netflix has only moved 5 points after earnings. Now, it was expected to move 30 points, okay? So in terms of that expectation versus what the market is doing after the hours, what does that mean for Netflix?
I've never heard a Netflix conference call. Does their CEO have a public one?
I think they stopped that one after he said, okay. A year ago, he came out and questioned why his stock was at 400 on the conference call. So I think they don't allow him to actually speak any longer. But no, I have not actually listened to one myself. Let me give you some other numbers real quick. Netflix added 570,000 U.S. customers in the second quarter. They added 1.12 million customers in the international markets. They are expanding into Germany, France, Australia, Switzerland, Belgium, Luxembourg in September as well. They also have Emmy. Nominated House of Cards, Orange is the New Black coming out to really kind of go after their competitors with Amazon and Hulu as well. Profits rose to $71 million in the quarter, 1.15 per share. That was coming in right at the expectation of 1.16. It also did 49 cents a year earlier, so we're seeing expansion there. Revenues rose to 1.34 billion, which was right in line with the expectation. And so, when we're looking at the expectations, Netflix came in right at expectation, and that's why you're seeing Netflix only up, a few dollars right now.
And to be fair, I mean, it's only an hour after the report. You do have all the after-hours action, and I've seen weird things pre-market the day after, a report like this. So you still got time for something else to happen, but it's interesting to watch a non-reaction out of a company like Netflix. Generally, this is a company that's very randomly volatile. A lot of companies out there, and the longer you trade, and if you watch the earnings, and by the way, those of you who are out there, even if you don't know how to trade earnings, pick your favorite stocks and at least watch them around earnings. So you can start to learn the behavior of how it works. Some companies are really predictable. Like big banks, they're going to move 2, 3, 4%. A Citigroup, a Goldman Sachs, Bank of America, they're not going to have a 12% earnings day.
They're not going to move a percent.
Apple Computer has become fairly consistently volatile, about 5-6% gap, sometimes even as low as 4%. And that's partly due to market cap. When you get to a certain size, I think it stabilizes the volatility a little bit.
I think it's harder to drive it.
Yeah.
I think it takes a lot more liquidity, a lot more demand or supply to drive it. And I'm really looking at Apple in that capacity, because you're absolutely dead right. Historically, Apple was a 5%, right? I mean, and it was like clockwork, 5%, 5%, 5%. And now it's got 7 times the amount of shares out there on the marketplace. It's much, much more liquid in the market. And the market still expects a 4% movement in Apple, like right around a 4.2% movement in Apple. I don't know. It's going to be really interesting to see if Apple moves 4%. I'm kind of leaning towards it moves somewhere around the 3 to 4% in that range, and that's why I think a short strangle on it is a pretty good trade.
I think so as well, and I think that they're still going to price the options at 5% volatility,
Exactly.
but I think behavior is going to be around 3. I think you're right with that. Maybe more in line with what Microsoft has done over the last 5 or 8 years with their earnings stuff.
Yeah,
Netflix, the first thing that strikes me with this whole conversation, and some advice for everybody out there: don't assume that the headline you read and the reaction from the stock have to logically
they're not the
together.
same thing, are they?
That's right. And an example of that, Matt, would be when you read something like XYZ company beats earnings estimates and revenues are this and that, and then you look at the stock and the stock is down.
Well, we don't even have to give an XYZ, Tim. The headline I'm reading here on Yahoo Finance is Netflix profit more than doubles. Okay, now
Right.
You just read that headline. It more than doubles. Netflix should be going up. And right now, I mean, the initial reaction was Netflix went up, but that's not the follow through. We're not seeing that right now. Netflix closed at $4.51. It's currently at $4.54. It's up $3 on a $4.50 stock. I mean, it literally is doing nothing right now. And so the headline is just the headline. It's just there to click throughs. It's all about the expectation. If the expectation out there was Netflix was going to do 1.15 per share, and that's exactly what it did, and if the expectation was it was going to do 1.34 billion in revenues, and that's exactly what it did, the market's not going to price that in aggressively. On the flip side, we had another report today, Chipotle Mexican Grill. Now, Chipotle, here's the headline: forget buying burritos and tacos at Chipotle. Purchase the stock. That's the headline. Love that headline, by the way. Now, Chipotle is supposed to come in at $3.09 a share. That's what it was supposed to come in. It hit a whopping $3.50 a share. A whopping. Now, when you have a company completely outperform the expectation, what should Chipotle be doing? Chipotle should be going up. And you know what? Chipotle is up 8% right now after the market. Market closed at $589. It is currently trading at $649. A 60-point gap is happening on Chipotle tomorrow.
What's probably the craziest earnings you've ever seen?
Oh, wow. I've seen some crazy ones with ISRG.
Yeah,
I've seen
Netflix too. I remember January a year ago, they gapped 50% from that, like 100 to 150. And they were only built in as an expectation of about 10%.
Yeah.
They gapped 50%. Yeah, no, Chipotle
one.
is an interesting stock, and this one, I was talking to my class today about this stock. We were looking at the volatility, and there are a lot of really neat tricks you can do, and if you watch our videos over at Trading Justice, we use a lot of these risk graphs and tools, kind of plot out trades that explain it, and it's neat that when you learn the math behind it, that you can kind of project this beforehand. Now, we didn't know Chipotle was going to gap 70 points, but we knew it was a fairly safe assumption it was going to make a good move. We knew what the market was expecting, and now it's exceeding that expectations. There's a lot of strategies, Matt, you can use to take advantage of that.
Well, I did a video just today on that. I placed a trade both on Netflix and Chipotle, and I'll probably place that short string on Apple tomorrow. But I was basically walking everybody through kind of how you do the analysis, and basically it has everything to do with volatility and market expectations. And on like Netflix, the market had expected, a 30-point gap one way or the other, but the average gap range was actually right around 35, 36 points. And so a strategy like that would be good is like an inverted butterfly. And so that's why I traded on that. It'll show a little bit of a loss tomorrow, I would say, unless we see some dramatic movements. And if I see Netflix starting to sell tomorrow, one of the things I love about the butterfly trade is I can pull off the short wings and I can keep that long put option.
Well, or even you could break it into two verticals too. I mean, you could
exactly.
take the bull vertical and play the bear vertical. I mean, there's a lot of neat things you can do to break those trades apart. That's right. That's one of the things I love about it.
So that's one thing, and I'm looking at doing something on that one. On the other trade, I have on Chipotle. Chipotle was expected to come in at 35 points. But the average gap range on Chipotle is like 45 points. That's what it averages as gap. And so I'm looking at that one. I'm saying, okay, I'm probably going to see a lot of movement there. I don't know the direction, neither does the market. So I did another inverted butterfly, and I'll probably max out 10% return on that probably tomorrow, just because it's such the extreme movement. The biggest problem with Chipotle tomorrow for me is it's moved so far, unwinding that trade is going to be an issue tomorrow. So you're absolutely right. Trading earnings can be an amazing experience. It can be fun. It can be a profitable experience. But you got to know a lot about trading, and you got to know a lot about volatility and market expectations, and the thing that a lot of people don't understand is how efficient the market is. How accurate they are at pricing these options these days.
Well, and you mentioned unwinding, and a little tip for those of you out there who are just new at this, starting some of these strategies out in your own account, learning how to practice with it. If you're ever completely stuck and you can't figure out why you're not getting filled, just call your broker.
Yeah.
You don't have to do it that often, but they even though it's an online broker most of you use, they still do have people that work there that can do the work for you, and help you understand it. You call them and say, hey, I'm in this trade, I can't get out of it. Can you help me with that? And they'll find another player on the other end, another trader, and they'll execute the trade for you. Mm-hmm. With some of these trades where you're in like 3 or 4 option legs, very often, Matt, you have to break them down leg by leg.
Yeah.
When they move in or out of the money like this, yeah.
Well, it's hard because you got to realize you got basically 3 different legs on that inverted butterfly, right? And you have 2 for every 1 strike price you sell. You're buying 2 strike price. You're buying 2. And you have different bid-ask spreads. You have different liquidity on all of those different legs. And so sometimes, it's hard to hit the mid price in 3 different legs, right? So you have to unwind them separate legs and whatnot. But I think you give great advice there. If you ever find yourself stuck in a trade and you don't know what to do, just contact your broker. They have wonderful trade desks that you can contact to help you get out of the trade successfully and learn something along the way, because I'm sure they'll explain exactly what's going on.
Have you ever been lost in a city, either driving or walking around, you can't find anywhere, and if you just would stop and ask somebody for directions, it would have saved you 2 hours of time?
Yeah.
But you're just too stubborn to do it. It's kind of how I feel with new students sometimes. It's like they know they should just call and get help, but they want to figure.
They want to figure it out, right? Yeah.
Yeah. Realize, guys, that's what the broker's there for, customer service, that kind of stuff. You pay the commissions over the years, believe me, so you might as well use the services that are available to you.
Well, even with your students, how many times do you find yourself sitting in a trading lab or a class, live or online, and people just don't dare ask? They don't dare ask you, and you're saying, hey, listen, come get it. They don't dare post a comment or ask a question out of the fear of looking, like they don't know. Well, there's a reason you guys should ask. Just get over yourself, ask the questions. And it's kind of funny that way. But I had one student that just joined Rich Dad Education from Anaheim. And she's so excited, right? Just so excited. And I was saying the same thing, guys. If you ever need any help, I'm on your team. Let me know. And so she looked me up on Facebook, and she says, just in one of the posts on one of the Facebook pages we have, and she said, hey, man, I got a question. And literally, I spent 30 minutes just typing back to her things that she could do to kind of help her get over the hump. And I didn't mind in any capacity. That's what we're here for. And so I thought it was just an absolutely, great thing that she was, daring enough to go to Facebook and start asking questions. But that's exactly what everybody should do. Don't be our old man. Our old man, he would go to he would drive us to Sacramento. Remember when we were younger and we used to go on all those vacations, but the vacation was really just kind of based around he had a meeting in Sacramento.
Yes, I remember them fondly, and I remember that trip specifically because it's an example of how even, life has changed from 25 years ago to today in the way you take care of kids. Do you remember what happened in Sacramento?
Yeah, I do. I remember, first of all, he refuses to ask directions on anything, but the number one thing I remember was, how old were we? Were 12 and 10?
I had to be 12. I think you were 14.
Was it? Okay. Was this the one that we left you in the mall?
Yeah.
Is this the one? We literally left you in the mall. It's like, hey, guys, everybody hop in the van. Let's take off. and T's nowhere to be found. You're gone, dude. We honestly thought you were kidnapped, and I don't know if it took us 30 minutes, 45 minutes to figure out Tim was missing. It was a while though, because if you remember when we used to go on vacation, how our parents would babysit us is they'd give us a roll of quarters and send us to the arcade in the mall, right?
Yeah.
That's what we did. They'd go off. We'd see them 3 hours later, and we're not in a nice neighborhood in Sacramento. We're in like a kind of a dirty mall type scenario, and they don't even care. They're like, "Hey, go have fun. If you get kidnapped, don't think you will." So, but yeah, you got lost, man, and we took hours looking for you after we actually figured it out. And I think, was it Chris that found you?
Chris did. He was the only one who cared about me. This is my childhood, guys.
Yeah. We left him.
I went and sat outside. I remember in Boy Scouts they teach you that when you're lost, just don't move.
I think you got found on a bench outside. I remember this.
I was sitting outside. The ladies just kept coming out and chain smoking that worked at the department store right there, and I'm just
hanging out.
Yeah, just chilling. It was.
Yeah, I remember this, and it was. I'll tell you right now. I was nervous. I was so nervous. That was one of the most scary things. But I also remember, down in we went to Disneyland one year, and I remember somebody else got lost, and we were young, and what in the world were our parents doing?
Yeah, just turn you loose.
Oh my
Maybe they
goodness!
wanted to lose one or two of us. It was probably hard raising 7 kids.
Oh, I especially when us latter ones,
Right.
Then the yearly vacation to Salt Lake City, Utah, we stayed in the Marriott every year, right? And here's your bag of quarters. Go to the mall. It has 4 stories on it. Find something to do. Come back later tonight. But coming back to, looking now, Tim, could you imagine ever losing any part of Sammy?
No.
Or Maddie? Could you imagine? Now we see people like put dog chains on their kids, and I'm not saying going that far. That's ridiculous. But at the same time, we are very, very protective this time versus what it was 25 years ago. And I think what we're trying to say is just ask for directions right now. Is that coming, bringing it back?
I don't know. Now I'm kind of remembering that I should have been more traumatized as a kid. I might call my therapist and have an emergency session this week.
If you had a couple sessions of therapy, work it out, work the details out, you'll get there.
Absolutely.
I want to remind somebody, the podcast listeners, about a podcast we did an emergency podcast we did last Thursday. And we were talking about the geopolitical situation in Israel going into Gaza, and also the plane being shot down in Ukraine. And the market, it didn't tank, but it sold out pretty hard. It had a big down day in the marketplace. And I remember you said something. You said, Matt, you got to remember, Google just announced earnings, and tomorrow's going to be more about Google than it will be about Ukraine. And then the very next day, the market comes right back up, not even caring about it. How do you see that geopolitical situation playing out? Is it going to have any impact on the market?
Well, I'll tell you, I read I will get to that, and I won't even. But I got to tell you something I read about today. I read a summary of this guy who was reviewing Russian news.
Yeah.
They control the news networks over there and the dissemination of information through the media. And if you are hearing this story in Russia, anywhere from these are the storylines and the theories, Matt. The U.S. This was actually the other Malaysian plane that was flying and pretended to get lost. It was already full of dead bodies, and the CIA blew it up to make Russia look bad. These guys.
You're kidding me.
No, I'm not kidding you. Like the way that they manipulate, and we do it too. And this is what governments do. They manipulate the flow of information so that they can, keep political power. And it is.
Lord.
I got to send you the article. It was disgusting. I'm not even. I
So
haven't even delved.
Basically, the CIA put a plane in the air full of dead bodies, and they shot it out.
Yeah.
Oh my God! Are people just
nationalism? It's gone back for hundreds and hundreds of years, obviously, and yes, I think sometimes, especially in groups, in large groups, whether it's political or religious, or you can get fervor like built up in a way to where you're just irrational. Human beings can become irrational.
I know, but
behavior. Yeah.
If that came out of the U.S., none of us would actually believe it. None of us would actually even listen to it. And if anything like that was reported, we would turn off the TV. Well, we're already turning off the news, but you get my point. I mean, I can't believe that people would actually believe this type of stuff.
Well, I don't want to go off on it too far, but I'm not sure we would. Look at the political propaganda around going to the war with Iraq.
That's true.
You look
Good
back
point.
at it 10, 12 years ago, and the way they manipulated information and ignored basic facts. I mean, and I don't even want to get into a Republican-Democrat debate because that's not the point of this podcast. We bring politics in it because the political landscape affects macroeconomic policy, and that affects markets.
Mm-hmm.
And whether you love politics or whether you haven't voted in 30 years, some of these things, they do impact money and the bottom line. And I think what we talked about last week is a good example of this.
Mm-hmm.
If you read the headline, if you read the headlines from all over the place last week, it would have looked scarier than the market interpreted it.
Well, the market was only down 1.2%. I mean, the rest was down the most. It got hit pretty hard, but the market itself, the Dow, the NASDAQ and the S&P 500, I mean, down 1.2, 1.5%. So, it was a sell-off, but it wasn't nothing radical.
I was having a conversation over the weekend, and going back to your original question, I don't want to lose it in my brain because I thought it was a great one, a topic I love. I mean, how does this situation as it moves forward affect markets? I think it's a really important question. How does it affect markets? And the only way I can see it really escalating fear in the marketplace to where it gets out of hand and kind of crazy and out of control is if some kind of regional conflict around Russia and even further tensions or sanctions where the U.S. or the G7 or the UN, financial sanctions, even maybe something even further, get involved with Russia. Outside of that, I think these little regional conflicts, the market will probably just shrug them off. Because at the end of the day, the market doesn't care about the politics around it. They care about how it might affect international trade.
Well, I was just going to say that. I mean, these restrictions, it's all about the supply of money in the marketplace. And when you have an impact like that, they're going to impact the markets. But I don't see it having a big impact unless they escalate dramatically. Even if you're going to see headline news come out of it, but the market told you its reaction on Friday. We knew the plane was shot down on Thursday. We knew what happened on Friday, and the market bought heavy coming into it. And then over the weekend, you had some time to digest kind of what was happening out there. And guess what the international markets did last night? They basically shrugged it off as well. The Australian markets, the Japanese markets were closed, but the Australian markets, the Chinese markets, they were all up. Not a lot, and even the U.S. markets, kind of sold a little bit in the morning, but it bought up tomorrow. It bought up coming into the close. So, the markets are telling you what they think about the current situation, and they're not concerned about it. You got to see some degree of escalation in that current situation to see the markets start to care a little bit more.
Explain what the BRICS are to everybody, because I have an opinion about the BRICS and a question for you, but maybe give everybody a quick rundown of what that is.
Well, think about the BRICS as the up-and-comers, the AAA ball players, right? They're the up-and-comers of the world economy. You're talking about the BRICS being, Brazil and China and Russia and India and kind of now South Africa and as well. Yeah. So those are the economies you're talking about with the BRICS. And the BRICS have major influence in the international monetary community and in the international, markets as well. They have great influence, and the BRICS are starting to move away from the dollar as a reserve status. In fact, China is now basically using their own currency as well, just with international trade agreements with Australia and India and Russia, and most of the BRIC countries right now have international trade agreements to use non-U.S. dollar transactions, and it's one of the ways the global marketplace is trying to tell the U.S., hey, listen, we're done with you guys, and we want to move away from the dollar as the reserve status.
So, and I'm not even saying I'm an expert on it either. In fact, some things, because I always thought of the BRICS as just like an index, a collaboration of these countries. But my friend was telling me it's more of a trade agreement.
It's international trade agreements.
kind of like NAFTA is for North
Yeah.
America, right? But they have trade agreements with each other, and I couldn't figure out why South Africa was such a big player there, but I guess they have such a high, like they really have a lot of gold and diamonds and
a
like
ton of basic materials.
and also regionally for Africa, a lot of the raw materials that come out of the Congo and all the Southern Africa, they trade through South Africa.
Mm-hmm.
So I didn't realize how
South
much
Africa is a
major
huge player. They're a real big player, and and you're absolutely right though. It's the BRICS countries. They are basically it's all about the international trading community.
I also heard we were having this conversation, and I really believe this. This is where I can't figure out what Russia's doing here, Matt. Obviously they're making some kind of strategic strong arm play. I don't think that the stuff with Crimea and the stuff with Ukraine now are accidents. I think that they are intentionally being much more
the Russians are bold
about it.
They're very bold right now, and Putin is basically coming out and he's telling the world that, hey, listen, we want change and we're going to force change. And basically they're just going back to the wheelhouse of, you know what, until people change, we're just going to force action. And it's a degree of insanity what's happening, with Crimea and Ukraine, and now the plane being shot down. But Putin's been getting out there and being bold out there in other aspects of it as well. And the Russians are historically aggressive, right, in the global marketplace, the international community, and they're being aggressive, ultra aggressive right now. And right now, Tim, I mean, if you're the Russians, don't get me wrong, we're not shooting down planes, and that act of cowardice, I really hope it does not go unpunished. But who's there to really kind of stop Russia from doing what they're doing? Who in the global community right now is standing up and saying this is wrong? We got to do something. Yeah, they're putting slight regulations, restrictions on trading and monetary supply. But man, I see if this was JFK, I think JFK would be bringing the entire world community together, trying to force change. And I just don't see anything going on right now like that. I see tweets about, how Obama's sad.
Yeah. Well,
It's a joke.
I haven't wrapped my head all the way around this, but I'll give you the answer my friend gave me. We had a real good long conversation about it. And he said, the answer to your question would be McDonald's. Corporations.
Coca-Colization.
The Coca-Cola.
Yeah.
Because I can't remember when the book was written. There was this old theory that two countries with a McDonald's in it have never had an official declaration of war against each other.
Yeah.
And the theory behind the book is that as economies develop and trade agreements happen, there's too much financial incentive, and you start cross-cultural kind of movements. People just don't have the incentive to create a conflict or to allow a conflict to really rise up and exist. And maybe that's what it is. And you look at the BRICS, and that's why I brought up the BRICS, is Russia's obviously a huge player there. Mm-hmm. I wonder what India and China and South Africa are going to be, in Brazil, are going to be telling them, hey guys, they can't really just splash the pot, can they?
This is 2014.
Yeah.
How in the world in 2014 with the cross generalization of our economic systems, how in 2014 are these things happening? I just don't understand it. Have we not evolved in the last 50 years? Have we not and take the and I don't want to jump in the Palestinian and the Israeli debate because that's just not our area of focus or emphasis. But at the same time, I mean, is this 1973? Have we not evolved? I just don't.
Yeah.
I don't understand it, and it just drives me absolutely crazy.
Maybe we'll have to do another podcast where we call it like politics with the boys or something.
Redneck politics, guys. Redneck politics, right here. Coming to you from sunny Emory County, Utah.
Well, I mean, understanding human behavior is an important part of being a good trader. You have to be disciplined. You have to understand mass hysteria and fear and greed and watch it play out on the world stage.
Well,
you can't get lost in your own politics.
Tim, a surface-to-air missile system was shot 34,000 feet in the air, blew 300 completely innocent lives away. It was supplied by the Russians to their insurgents, and it was basically this flight carrying 10 different nations, 10 different countries. How in the world has the world economy not come down harder on what happened, number one, but more importantly, If that didn't spook the market to sell, I don't know what will. I mean, honestly, what is going to be that triggering event that we've all been waiting for the last 6 months for the market to correct?
I think you can interpret the market's response as this, is that conflict doesn't scare them in terms of valuation.
Mm-hmm.
It just doesn't scare them off. I've seen it time and again over the years. Sometimes it does, and usually it does when it has an effect on trade.
Mm-hmm.
Like if they worry that the free flow of oil around the globe is going to be disrupted, or the ability to trade gold or currency or whatever, or trade agreements.
Mm-hmm.
But when it's just conflict, even if it's complicated and even if it's shitty, to realize that it's a difficult world we live in, the market doesn't always see that as a trigger to sell.
Think about it like this, T. You had this attack that happened, right? It was a physical attack, and it really didn't spark a panic sale. But in August 7th of 2011, you had a risk of, who was it? It was Greece that was going to default. They hadn't defaulted yet. There was just a risk of that, and the markets tanked 20%.
Oh, yeah. A bank defaulting on bad derivative loans. Or,
even as small as Greece,
Absolutely. That scares the market way more than conflict.
Oh, absolutely.
Some trigger in the banking system or the leverage system out there, the way that money is created and moved around and how we control. That is way scarier to the markets, because the market saw what happens to Lehman Brothers.
Mm-hmm.
See what these guys, they're all playing a game of poker against each other. They may be competitors in Lehman and Merrill and Goldman. They know that they can't, if you take down one of the other guys, it can disrupt the entire game. Because if a bank defaults, who's got to cover it? The other banks that were holding those loans, right?
Yeah.
No,
what will spark the market sell? It will be the Fed. It'll be a negative earnings season, which I do not think is this earnings season. By the way,
you don't want to hear my theory on it because it will sound too pessimistic.
And we're positive people, right?
I think the market will sell when the Fed has let all of their buddies on Wall Street out of their short-term and long-term interest packages that they've had to hold. And when they can rebalance their portfolios so they can take advantage of a market sell-off, they're going to allow the institutions to stick the public.
Well, if that's the case, you're talking another year.
That's probably...
You're talking another year of the fade. It won't be strong up. Okay, and you might see weakness in certain sectors, but if that's the case, and I could see that playing out, you'd see a fade for a year.
Yeah, we'll see. It's what we always say. I'm not even going to get too stuck on that thing, and that's where let's bring this back to the original question I had about weekly routine.
Mm-hmm.
One of the reasons I believe so firmly in routine is I don't want to just get stuck on an idea that I just am so laser focused on, I get tunnel vision. I need to reassess the markets every week and try to be as open-minded as I can and just make the proper read.
Yeah.
Reassess my account, reassess the risk in my account, the risk in the market. And if you're always coming back with the same answer, you've got to wonder if you're reading it right, or if you're open-minded enough to see the other side of the argument.
Mm-hmm.
Yeah.
Well, coming back to your read then, in looking at the major markets right now, the S&P 500 bullish uptrend, which means we should, despite what we think about the economy, despite what we think about the Fed, we should be trading bullish strategies for the majority of what we're doing, correct?
Yeah, the market's been bullish.
Yeah.
Can't fight the trend. Yeah.
And the market's in a high base situation, which means if it breaks out of 1983, it's going to go higher, correct?
Yeah.
Okay. So that makes your routine fairly simple. And should we prepare for the eventual correction? Should we prepare for what the Fed is going to do or what could trigger this? Absolutely. But the moment in time where you have to think you have to predict accurately when this happens, that will be the first time in the history anybody's got that right. We never want to get into the prediction business. We want to get into the analysis business. We want to get into the probable business. And regardless of what anybody says out there, you said something that absolutely 100% has to be the case, and that is to trade with your eyes.
That's right. Yeah, you have to trade what you see, not what you feel, not what you think. We say that all the time. I know it's easier said than done because emotions get tied up. But this is where trading plans become critical, is you can't just hope that you'll just always be under control emotionally. Come up with a plan before. Like at the beginning of the week, set a goal. Come up with a plan for your account. On every individual trade, set your profit target, your exit rule, and make sure your money managed appropriately. Trading can feel pretty simple when you keep emotions out and you're structured. When it feels a little haywire and hectic, it's when the wheels start coming off.
Yeah. Well, it's when you start. It's the old going on tilt, right? Yeah. Everything's pretty straightforward when you're doing stuff you should be doing, when you're just focused. But then you get a couple losing trades and you start questioning the techniques and you go on tilt and you take too much risk, and then all of a sudden it's going to take you 3 months just to get over it. Looking at this week in the market, let's bring it back there. What are you kind of looking forward to this week? I know I'm looking forward to the airlines and some earnings reports. What are you looking forward to?
I just want to see Apple and the reaction to Apple and the news around the overall market. I'm not even as much concerned about whether Apple's up or down. I want to see how the overall broad market responds to Apple because they're such a big name in the area. Obviously,
would you say they're the number one earnings report every year, every quarter?
Well, I mean, GE is a big one for institutional traders because they're such a global powerhouse. Apple, because tech leads the way, is right up there, though. And, I mean, Alcoa always is big because it's the first major Dow 30 component to come out. But I would put Apple right close to there. And Google now. I mean, obviously, for a long time, both of those two.
I would say players. in terms of the marketplace, I think Google's the driver. I think Apple's the driver. GE definitely a driver. Microsoft, they're not the driver they once were. I think actually the report on Facebook might be more of a driver than Microsoft these days, just because of the level of importance in what we're seeing kind of in the economy in 2014 with social media and whatnot. So you're looking at a lot of those drivers that the hedge funds love to trade and love to trade actively.
Yeah, that's right. And, well, Microsoft, I was talking about this the other day. It's amazing to me that Microsoft can fly under the radar in the stock market.
They do. How many times do we get questions from students regarding, hey, listen, I'm looking at a trade on Microsoft? Hardly ever. And they're still one of the biggest stocks in the world.
Sure.
What'd you think? What'd you think of the news about Microsoft cutting 18,000 jobs?
Well, I mean, it seems like an obvious thing for a corporation to want to trim cost. It makes me more strengthened in my resolve to help educate people because it's just another reminder that corporations just are not going to treat their employees like they used to.
They don't care.
No, and they'll cut your job, and you cannot rely just on that as your only plan.
Well, honestly, I mean, Tim, my first thought, one of Breezy's cousins or uncles works at Microsoft. Him and his partner, they work at Microsoft, and so my first thought was like, oh, I hope that wasn't him. That was my first thought. My second thought was I was down there in Anaheim doing an event for Rich Dad, and I said, guys, listen, if you think being an employee is safe, okay, go ask those Microsoft employees right now. 18,000 lives changed, because it's all about the bottom line. And you want to see what the market thought about it? Microsoft had its best day in over a year on the announcement.
Yeah, and they've got earnings coming up too. And so after a big volatility day like that came out of nowhere, how do they respond now? Even if earnings are good, they've already had a big jump. I was looking at that today, and it would be hard for me to conceive that they're going to have another big gap up to the upside after they already had one last week, the way that company trades. But that's right. I mean, the markets, they don't have emotions. They see that as a cutting cost move, and Microsoft
helps
can
the bottom
bring
line.
More profit back. Yeah,
helps the bottom line. Looking at kind of after this week, coming into a week and a half from now, and I'm sure we're going to be doing more podcasts as we get closer to that, especially around that event. But we got the Fed on tap coming up, Tim. Where do you think, the Fed's obviously going to continue to do what we think they're going to do, which is curtail. My question for you, Tim, is this. What does the market do after the Fed is no longer printing money in October?
they'll start to, I mean, that's what they're doing right now. It goes back to the same conversation we were having earlier. They're starting to reposition. They'll reposition, I believe. And as soon as institutions are ready to let it drop, they'll let it drop. These institutions, kind of a wink nudge, kind of situation. They are all continuing to pour money into the market. That's why the VIX is at historic lows, and it's been there for a while. There's no way that the Fed curtails and moves away from that interest policy and the market doesn't have a correction at some point.
Has to.
Does it have to be a crash? No. Maybe it's just a smaller one, or who knows?
Maybe it's 10%. Maybe it's 15%. When we talk corrections, we're talking 10 to 20%. That's what we're talking. We're not talking 50%. But what you're saying is giving their buddies wink, wink, nod, nod, a little bit of a head start. It does remind me of what was going on in late 06 all through 07 as well.
Yeah, I agree with that completely. And you saw the repositioning, and then you eventually saw the crash. Now, there usually is a catalyst with the crash. So companies having problems financially, big major players, missing numbers. That's what happened with Lehman Brothers. It was a special time with those companies. And I still think there's a long conversation we can have about fractional banking and leverage banking and whether or not we still are at excessive levels. I've read a lot of numbers, and we'll dive into that during another podcast. But the Fed is going to be the biggest event in town. When I look at the economic calendar, there can be 15 impactful events during a week. If one of them's the Fed, I'm planning everything around that.
Nothing else matters. I agree. It's the Fed, and everybody else is just second fiddle. The Fed announcements are the biggest announcements in the market. They're the number one economic, leading indicator out there, and there's no bigger than the FOMC policy statement. Not a speech, not the minutes. The biggest one is the FOMC policy statement. That's the one that's going to drive currencies, 100, 150 pips. That's what's going to drive the market, 1% to 2%, either up or down. And I don't know if it's this one coming up because, we pretty much know exactly what the Fed is going to tell us. Are they going to change anything from the standard? We're curtailing an additional $10 billion. We don't know when we're going to raise interest rates. The economy, we're a little worried about the unemployment, even though unemployment dropped to 6.1, but we already talked about that last week. It's I don't know if it's this one. My big one is October. And when they are announced that they are completely out of the market in October, and they're no longer propping the market up by billions of dollars every single month, what are they going to do with the $4.7 trillion they have under their books?
Well, the fact of the matter is, it can come down to simple supply-demand metrics too, because that money doesn't go into bonds. That means there's less money moving into bonds. So keeping interest rates artificially low couldn't happen. So even if they don't rise, just the natural bond market interest rates will rise. And eventually the Fed will have to raise rates to reflect that. And as rates rise, it's more attractive. If the yield goes up, it's more attractive for investors to be back into fixed income. And so eventually money will start to rotate. It's intermarket analysis 101 since the beginning of time with markets. You have fixed income, you have speculative risk. Stock market has been the only place for investors, long-term traders, to put their money, because who wants to be in fixed income right now? As those dynamics change, I think it'll change a lot of things. That's a good thing for traders, by the way, guys. We don't mind markets going down or having some volatility or some back and forth, because individual storylines will always shine. You'll always have great companies rallying and some selling off. The more we need volatility to come back, though, to really generate a lot of. To me, we need the action. We need the volatility to come back for option pricing, and we need the action.
Think about what a lot of traders do, and not consumers. I'm talking traders, the institutional traders, hedge funds, people like you and I, the individual investors, right? Even on stocks, we love selling covered calls, because you make more on the selling of the derivative than you do on the actual stock itself. And right now, you're not getting anything for a covered call. We love selling credits, but we can only do that on stocks that are like Netflix or CMG or Priceline. You can't do it on some of the lower beta stocks, and which means you have inherently more risk in a stock that drives 2, 3, 4% daily. So, it's a little frustrating because of volatility. And that's why a lot of us celebrated that the drop on on Thursday, when you saw the 36% spike in volatility up to 15%. It's like, oh my goodness, finally we got something we can sell. And then it just so happened to go right back down to 12 and 11.5 the next 2 days, right? But at the same time, a sell-off is not bad. Just getting, my best day in the market this year, Tim, last Thursday.
Oh, yeah. Yeah, you mean, I knew you were short the rut.
Short puts. Yeah, I'm still short rut, so my worst day was Friday.
Yeah.
So that's how it goes. That's how it goes. I'm keeping that. I'm going to keep that rut trade until, and obviously it's just one trade out of many that you do. But as long as the rut underperforms the market, I mean, even when the market's been going up, the rut's down a little bit. So I'm going to keep that until I see some type of correlation come back into the indexes.
You guys are listening to our podcast here at Trading Justice. You can find us on iTunes. You can always just go check out the podcast on our website, tradingjustice.com. If you enjoy it, let us know. We like to hear feedback. If you have any requests, let us know. Matt, I was thinking we should have like some user or viewer contest or something.
Ooh.
Give us a trade. We'll review it on the podcast. We'll talk about it.
Email us.
Put it in our forum.
Great idea. We'll post on the Trading Justice webpage and the tradingjustice.com. We'll have them post recent trades and we'll review them for the podcast. Also questions. We should do a segment for anybody that has questions on any type of trade, whether it's an investment or shorter term or long or short type of trade. Let's make that a little bit more interactive. And I think those things will build up as we build our audience. As we have a much larger audience today than we did when we first started this podcast. So we're going to continue to build that up, and hopefully people will start interacting a little bit more, kind of that ask for directions type, hint, hint, wink, wink. So definitely we'll post that out there, and we'll start bringing that into the show here. Let's see, next podcast coming to you from, I would say, Thursday night, T.
Yeah, you're going to be out and about, I guess, huh?
Yeah, I'll be down in Houston, and I'll tell you right now, Tim, I love all of everybody equally. That's obviously not true, but I'll tell you right now, I love Texas. It's probably my favorite state in the Union. I just absolutely love it. It's the people are awesome. The food is fantastic. The weather is great, and I love Texas. I've been to Texas in the last 6 months like 7-8 times, I would say. And my favorite city so far is Austin. And 6th Street in Austin is off the hook. Windows are gone and people are playing guitars. It's just, it's an amazing town. Love Dallas too. Dallas is great. Houston's great. San Antonio's a ridiculous, awesome town. I mean, they're all great, but those are the ones I've primarily been to. And I'll be in Houston this week. I'll be in Dallas next week. So I'm making my little Texas state trip to bring in the powerful message of Rich Dad Education and, Matt Justice to the state of Texas.
Well, I was trying to think when you were saying that, because I have a friend from Texas. He's in my bowling league, and he won't stop talking about it. It's like, even though he hasn't lived there in like 10 years, it's still, Texas is the biggest thing in the world. Don't mess with Texas.
They're different. It's bigger than everybody. They're different, and they're amazingly different. I love it. I love the mentality. I love the, hey, we're a bunch of badasses, and we're willing to take you behind the woodshed and beat it out of you a little bit.
Well, I was trying to think about this. Is there another place in the country that has that specific regional or location pride? Like being a New Yorker, you got an attitude about that, obviously. They.
I'll tell you, in all my travels, the one state that reminds me of kind of the Texas mentality, Utah.
Really?
I'm telling you right now, they fit. They just fit. So it's, very independent-minded type individuals, right?
State pride, hard work.
Hard-working type individuals. Independent. They're very similar. And as you go across the United States and whatnot, the regions are very similar. It's amazing how that works like that. But yeah, it's Texas and me work out. I'll tell you that right now.
One of the weirdest ones for me is California, because it might be the most beautiful state. If you travel from California from top to bottom, unbelievable.
Northern California, if you get into the mountain areas, Northern California is ridiculous beautiful. I mean, just amazing.
And most people from California know how beautiful it is and how amazing it is. But every time there always comes a but when you talk to them about California, like, but our political situation's screwed up.
But
you don't
but we pay too much taxes.
Right.
Right. But what about our traffic?
Right.
Yeah. Huh? Yeah, but what if you had to live by this person?
Right.
Seriously, it's kind of funny that way. Okay, let's kind of start wrapping it up here. Where does the market go this week, Tim? Up or down? Got to give me one.
I'm going to say up.
I'm going to say trickle up. I'm going to say a little trickle up. Okay.
I'm going to say up. We'll know a lot more, obviously, tomorrow night. I think you'll know by Wednesday one way or the other, to set the trend.
Oh, absolutely.
Look at the earnings for tomorrow night. I mean, it's huge tomorrow.
Well, it's Apple.
So, Apple. I think Microsoft is too. Yeah.
So I think tomorrow's the big day, and I also think Thursday's a big day this week.
Yeah.
Those 2 days I'm looking at, but I do think it's going to be a little up, little down. But I think it's going to trickle up. I think most earnings we've seen, we have enough evidence so far that the market is responding positively to most earnings. And earnings, there's been no absolutely just, shocking displays of earnings. And my little baby girl Katira came in here just barely. You want to say hello to Tim? Say hi, Tim.
Hi, Tim.
Hey, Kat. We're going to come down to see you guys soon, okay? Sammy was talking about you. Me and Matt got kids the same age. Pretty much. They're amazing. But hi, Kat. Kat, if you could tell everybody out there, because there's a lot of people listening, what do you do with money when you get it?
What do you do with money when you get it?
Keep it or spend it? She thinking?
She's just sitting there smiling. This is my future all-star trader right here. I'm going to tell you that right now. And I got to tell you a quick story about that money. She found a $50 bill. And when I say she found it in my wife's purse.
Right.
And she grabbed it. And my wife was looking for it forever. Who stole that $50? And obviously we blame Tanya and Ortegan. But all of a sudden, one day, me and Kat, we go to the store. And she grabs out her money out of her wallet. And she has a $1 bill and a $50 bill. Okay? And she says, "Oh, Daddy, I got some money." And I said, "Well, honey, do you mind if I, borrow that $50 so I can pay for the groceries?" And she says, "Oh, no, I got another one." And she showed me the $1 bill. And so she just thought that they were perfectly the exact same thing. But, Kat, say goodbye. Say bye to Tim. Say bye.
Bye.
Bye, baby. We'll come see you soon, okay?
Okay. All right. So she is my future trader. I'm working on my son as well, but
it reminds me of a story. What you just told me. I have the exact same story for Aubrey. When Aubrey's my oldest, and when she was about 5, she decided to do a lemonade stand. Which, by the way, if your kids have never done anything like that, just do that. It's
cute.
Every lemonade stand I ever pass in my neighborhood, I stop, even if I don't want it or it doesn't matter. Because it's not just cute, you're promoting the idea of get out there and be social with the neighborhood, sell something, be an entrepreneur. Yeah. I'll stop from now till the end of time. But anyway, Aubrey's out there selling, and one of the neighborhood kids, one of the older girls, she's probably about 13. She came by and she paid for lemonade with $1, and Aubrey didn't know how to do the math, and she gave her $10 back in change.
That a girl, Lob. Charity right there.
And, at first I was like, "Aubrey, what are you doing?" And I see in her eyes she gets embarrassed, and she's like, "Oh, maybe I messed up." I'm like, "No, it's fine. We just learned this is what this valuation is. A 10 is this much, and a 1 is this much," and she learned a lesson from it,
Absolutely.
Well, I'll tell you, I'm excited to do the next one because the next one means we're going to be talking about the Fed. We're going to get closer to that.
We got on Thursday night, we're going to have a tremendous amount of information from an earnings standpoint. We'll go talk about what happened to Apple and Microsoft and Amazon and all these big name companies that are reporting earnings. Make sure everybody's apprised of exactly what they did, what they reported, how the market responded to it. Because I think earnings is this very strong catalyst for the next 3 months. It's a huge catalyst for kind of how the market's going to perform for the next 3 months. So, we're going to have a lot of information coming out on Thursday night. So check out the podcast on Thursday. Check us out, like Tim says, on iTunes, Trading Justice. Go ahead, leave 5 stars, leave a review. That's what we're doing this for. And post some comments, make it interactive. Check us out at www.tradingjustice.com. And until next time, Tim, say goodbye.
Dude, you got my song?
I got your song.
See you guys. Peace.
Later.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.